While national central banks keep a check on the availability of conventional currencies, the entire supply of Bitcoin is fixed and unchangeable. 21 million Bitcoin will ever exist. There are currently little less than 2 million left to be made after a little more than 19 million have been mined. With each new block, the Bitcoin system automatically halves the number of new coins that are created. The limited supply and issuance method of Bitcoin are among its most significant qualities, according to Bruce Fenton, CEO of fintech firm Chainstone Labs. In an unpredictable world, Bitcoin offers assurance. The code determines how it is issued, not people. What is Bitcoin halving? The reward for mining Bitcoins is reduced by half during the Bitcoin halving. It happens every 4 years to divide in half. In order to combat inflation by maintaining scarcity, the halving policy was incorporated into the Bitcoin mining algorithm. Theoretically, if demand stays the same despite the slower rate of Bitcoin supply, the price will rise. According to David Weisberger, CEO of trading site CoinRoots, Bitcoin currently has an inflation rate of less than 2%, which will drop with additional halvings. Comparing it to the June Consumer Price Index's annualized inflation rate of 9.1%, things are looking pretty good, CPI. According to Chris Klein, Chief Operating Officer of Bitcoin IRA, Bitcoin's production scarcity is what determines its finiteness, and when reward goes down, supply is constrained. An increase in demand at a time of limited supply has a favorable impact on price, which can make Bitcoin appealing to investors. How does Bitcoin halving work? All Bitcoin transactions are verified by a decentralized network of validators through a process known as mining. When they are the first to utilize intricate math to add a collection of transactions to the Bitcoin blockchain as part of its proof-of-work method, they are rewarded with 6.25 BTC. 6.25 BTC is currently worth approximately $148,000, which provides miners with a respectable incentive to continue adding blocks that keep Bitcoin transactions flowing smoothly. These blocks of transactions are added typically every 10 minutes, and the Bitcoin code mandates that when 210,000 blocks are generated, the incentive for miners is cut in half. That occurs approximately every 4 years, usually during times of increased volatility in the price of Bitcoin. When was the first Bitcoin halving? In November 2012, the first Bitcoin halving took place. The most recent halving took place in May 2020, while the subsequent one happened in July 2016. When Bitcoin was launched in 2009, the incentive, or subsidy, for mining initially began out at 50 BTC each block. Every time there is a fresh halving, the amount is reduced by half. For instance, the incentive for mining Bitcoin decreased to 25 BTC each block during the first halving. There will only be 64 halves in all, with the final one occurring in 2140. There will be 21 million Bitcoin in circulation at that time, and no new coins will be produced. Miners will then only receive transaction fees going forward. Less mining activity would result in a less secure network, warn experts. However, Patricia Trompeter, CEO of cryptocurrency miner Sphere 3D Corp, points out that while the halving lowers the payout for miners, it does so without lowering the demand. Increased prices would encourage miners to continue processing Bitcoin transactions. When is the next Bitcoin halving? According to the Bitcoin algorithm, halving must occur once a specific number of blocks are generated. Although no one can predict with certainty when the next halving will take place, analysts predict that it will happen in May 2024. The interval since the previous one would be almost exactly 4 years. According to experts, the somewhat predictable nature of Bitcoin halvings was intended to prevent a significant shock to the network. However, it doesn't follow that there won't be a trading frenzy surrounding the subsequent halves of Bitcoin. According to Rob Chong, CEO of privately held Bitcoin miner Griffin Digital Mining, historically, there is a lot of volatility in the price of Bitcoin leading up to and following a halving event. However, a few months later, the price of Bitcoin usually ends up being substantially higher. Even if there are a lot of other factors that affect the price of Bitcoin, it seems that halving occurrences are often bullish for the cryptocurrency after the first volatility subsides. Baker advises caution when it comes to the next Bitcoin.